I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
The Dow Industrial Index has just been climbing like crazy over the last few weeks. Is this something that portrays a really booming market, or is it kind of a huge cloud of smoke where you think there's a giant forest fire burning, but underneath the smoke there's very little action?
Well, I guess it's actually a little bit of both. You know, price is hard to deny. I mean, price is price. It is what it is. And yes, the market, as of yesterday, both the industrials and the transports closed at new highs. You know, I think we talked last time. A question I don't remember because my conversations and what I say here and there runs together, but we did discuss the fact last time that the Dow theory, primary bearish trend change, and all that was negated, did we not?
Yes, we did.
Okay. And then since then, of course, here we are at newer highs. So, from that perspective, yes, you know, hey, it looks good. A new high, right? But I still think, Jim, not to be bearish. I mean, it is what it is. It's just the data. It's just the data. And, you know, I think that we're seeing still an ongoing, much larger topping process with a bubble. I do believe this is a bubble. Nobody's talking about it well, there are a few talking about it. But, you know, we've had the enormous move out of the '09 low. We've had all the intervention. And then when you look, as you said, beneath the surface and you look at some of the economic data, it really hasn't changed anything there. It's all, you know, been, moved into, been a function of the stock market more so than the hardcore economic data. And then when I look at this rally, you know, I'm not denying price. Again, I acknowledge it. I mean, I'm not trying to in any way say that price isn't where it is. I mean, yes, it is. I see it. But in the last month, since the Trump rally began, if you will, coming out of the election low, I have looked at this advance and tried to justify it. Honestly, tried to justify it. I want to justify it. Would love to. Make my job a hell of a lot easier. But the more I look, the more I can't justify it. And what I mean by that is, and it kind of, I guess what you were saying about the smoke and then looking beneath the surface and not seeing a whole lot of fire, just a lot of smoke, is that, you know, the number of stocks, for example, above the 150-day moving average. I'm just using this as an example because it's a good example. So if you look beneath the surface at, say, a number of stocks above the 150-day moving average on the S&P 100, it hasn't even moved above its previous high. If you look at it on the S&P 500, last time I looked, I didn't look today, but the last time I looked in the last couple of days, it was still below its previous high. And then as I dig and I look at like the bullish percent and so on and so forth, I see a thin market. When I look at the Dow Jones Industrial Average themselves and the 30 stocks that make up the Dow Jones Industrials, and then dig within those 30 stocks, there's divergences and non-confirmations within those 30 stocks. And so I'm not making this stuff up. I'm not looking for reasons to be bearish about this. I mean, yes, I acknowledge price is where it is, and surprisingly so. But it doesn't change or negate what I'm seeing below the surface, as you said. It's very concerning, But until we get another Dow theory primary bearish trend change, we see a non-confirmation begin to form, I guess the levitation act will continue. Now, short and intermediate term, we should be nearing a short-term top, which should, evolve into an intermediate term top and a correction. And then it's going to be, what happens from there.
Right. How big will the correction be and how long will it last?
Well, the correction should take us down into February, March is what the cyclical phasing looks like. And that correction doesn't concern me too much. I mean, that's pretty much normal and, I expect based on the cyclical phasing and that sort of thing. That doesn't bother me. It's more what the structure associated with that decline. In other words, do we get a Dow theory non-confirmation as we make this intermediate term top? Do we see a Dow theory primary bearish trend change as we move into the intermediate term low? What happens? What does this decline into the intermediate term cycle low yield structurally and with the other evidence? That's what we need to see.
We'll have more with Tim Cyclesman Wood right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what are the foreign markets looking like and how do they reflect the Dow, or do they?
Well, Jim, we know that they're not tit for tat, but we do know that the general cyclical rhythm is very similar in that we made highs in 07 and lows in 09, and the short and intermediate term cycle lows tend to occur in close proximity and that sort of thing. And this is another example of why the advance seen in the select markets in the U.S. are questionable. For example, you look at the CAC. It peaked in 2015, and this advance here is nowhere near the previous high. Nowhere near the 2015 high. And so that non-confirmation, it serves kind of like the Dow theory non-confirmation. I mean, it's telling you something's not right. And so while the cyclical rhythm is the same, the level, the degree of the move between the averages have been vastly different. And so again, structurally we have that non-confirmation. If we look at another one, I'm walking through charts as we speak. We look at the DAX. It peaked in 2015, and we're nowhere near that top. So we're seeing massive non-confirmations, and that's a perfect example of what is bothering me here with this rally. If we look at the Dow Jones, and let me pull it up to make sure that nothing has changed, but if I look at the Dow Jones World Stock Index even, to compare, it's the same thing. The high was, in fact, in 2015. Yes, we've seen the advance out of the January-February low, but there's non-confirmations. It's not confirming. And so that is my problem. That, combined with the internals of the markets themselves, when I say internals, the internal related indicators, and I'm not talking necessarily just about breadth, but I'm talking about the number of stocks participating. It's thin, and that's the problem.
Right. So you always talk about the velocity of money. Not a lot of velocity there?
Well, no, look, the velocity of money, none of those things have changed. They're still negative. I say negative. They're still at the, I don't have that chart in front of me, but I looked at it a few weeks ago, and there's been no change there. None of this stuff has affected the velocity of money, the job participation rate, or nothing within the underlying economy. It's like I've said, the advance in the stock market has been camouflage. And the Dow Jones Industrial Average and the S&P by and large is the ultimate camouflage, because it's camouflaging what's going on really even with the foreign markets. And so, while price continues to go up, I acknowledge that. That's good. That's great. But there's problems. There's something is not right here. I mean, even if we look at, and let me go there, as of this recording, the NYSE, the New York Stock Exchange itself, has not confirmed this advance with a new high. The 2015 high stands. Let me go to another chart. The American Stock Exchange. Let me look at it just to make sure that I'm not misspeaking, that something hasn't changed in the last 24 hours since I went through charts. Absolutely no change. 2014, the American Stock Exchange, the American AMX Composite, peaked in 2015 and nowhere near the high. Even the advance out of the November low hasn't bettered the previous high from back in August. Again, the non-confirmations. And the fact that when you look at the longer-term cyclical ebb and flow, for example, we had a 2002 four-year cycle low in the American Stock Exchange. We had a 2007 extended four-year cycle top. We had the 2000, in this case, it bottomed a little bit ahead of the other markets. It bottomed in late 2008, and then we had the extended move, in this case, that peaked in 2014, and now it's broken down, and it's not participating. And so these are warnings. These are my problems with the rally.
What about other things such as gold? Gold's been sliding. Is that going to be a long-term thing, or is it about near the bottom?
It's getting closer. Time-wise, it's getting closer. As you know, Jim, that's the one thing that has been behaving normally, at least in accordance with my work, I should say. I've said all along that the rally out of the December low last year was a counter trend. We finally saw that high, and then since then, we've seen it continue to slide lower and lower and lower. And, I said that we should see a retest and ideally a violation of the December low from last year. And we're halfway or so, maybe a little better, back to that low. So that remains on track. I still think that we're going lower in gold. Short term, where we could see some bounces or a bounce. And there may be a couple of bounces along the way before we get to the ultimate low. But I do think come first quarter, as close as I can say now, I think we should be at that longer term low in gold, and gold is going to start to look mighty good. We're going to have a 9-year cycle low, and gold's going to be poised, man. It's going to be right. It's going to be, I think the potential there once we get to that low is going to be enormous. And the thing about that, if you think about it, be careful what you wish for. But I know the gold bugs out there want to see, they've been looking for this low. I mean, I know there was a lot of excitement coming out of the December low. I get that. And I gave my warnings then, and here we are. It didn't work out. I say it didn't work out. My call worked out. The rally didn't work out for the people that were overly optimistic about gold at the time. But what I'm saying is that be careful what you watch or what you wish for, is because if gold is going to rip out of this pending 9-year cycle low, it's telling us that there's something wrong. I mean, gold doesn't go up when things are good. So, I have these concerns about the equity market and it being thin. We have this new administration. We have the 9-year cycle low in gold bottoming. So it's like a lot of uncertainty on the horizon is what this is telling me, this setup is telling me.
The price of oil has been trading above $50 lately. Is that going to continue?
The price of oil, as with gold, I've been looking for a retest of the lows from earlier this year. There has been some abnormality with both the seasonality and the cyclical count, in that it hasn't given up. It hasn't wanted to give up. You know, we made the high back in the summer, and let me pull up a chart while we speak. Yes, it was in June, early June, and then it looked like that it had rolled, but then there was one more push, and it went up into October, and then it looked like it rolled, and then we had this one more push. I still think that there is a decline in sympathy, if you will, with gold back down toward those lows. I can't say at this point necessarily that we're going to see the February low violated, but I do think there's a push back down in crude oil still.
How low do you think it might go?
I think it's going to approach. I do think I can't, like I said, I can't say at this point that it's going to violate the February low, but I think we could get back well into the 40s, and then when we get, if the bottom does occur, and it's starting to look like that maybe it will, that if it does occur above the February low, then we have basically, to use the Dow theory analogy, if you will, kind of a non-confirmation confirming the low with gold, and then crude oil and gold and the commodity complex would be set up to move higher. And that's how it's looking at this point. But I do think there's another trip back down in crude oil.
Tim, so we've done the major markets. What about other commodities? People have told me that perhaps corn will be a lot bigger this coming year.
Well, Jim, you know, looking at the grain complex itself, you know, it's not something I look at frequently or that we talk about. I don't know that we've ever talked about it, but looking at, you mentioned corn, looking at it, you know, short term, I think we're probably at some sort of, as I go through the charts, we're at some sort of a top. Intermediate term, possibly a top as well, but a little longer term, looking at corn and even soybeans, I like it. It's kind of telling me the same thing. We have a retest of a previous low, which specifically in corn, we had like an annual / seasonal cycle, if you will, low back in September, and it looks to me like that. You know, we could see some nice moves there after some backing and filling, kind of like with crude oil and gold. I see higher prices on the horizon. At the moment, I don't think we're quite there, but it looks like it's trying to set up for some nicer advances later next year.
Tim, thank you so much for chatting with us, and we'll be talking to you just before Christmas to see what Santa might have planned for our portfolios.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. If you have any questions for us, you can email us at info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.